Okay, here's what I'm looking at. The sell delta is still superior to the buy delta. Now, there's potential for this to become a range, but we're right there at a 15-minute interval, and it's actually creating liquidity with this pattern. But I'd argue it's still early for any liquidity spikes. What is this area saying? Let's refresh the profile. There we go, and that's why we wait. Let's refresh the profile. So from current price, we have a new low. From current price to our range is high. Ooh. So you good thing we refreshed the volume profile. It's now rather E-shaped. It's like a sell trend. So we don't have a internal reversal point. Perhaps our external is where we could anticipate a reversal. Let's look at the correlation between our external. So this is our 3-minute external. This is the 1 minute zone. No, that's our 3 minute. Our 1 minute, there's no correlation, so selling there would be a bad idea. Now again, I said it looks like a sell trend. If this 1 minute candle closes below, that would indicate that the next 15 minutes would like to trend lower. And we can actually get a sell. A sell stop would be even better. See, that's if the candle closes below, because then we'll know the next 1 minute at the 15-minute interval we'll like to trend lower. Could go on with half of our balance, so $200. 7, 3. Let's see. Okay, we got the indication the trend lower 4. And we didn't. The sell didn't execute. Okay, there we go. The fuck? We got good confirmation, but it looks very jittery. Stop loss. Take profit. Let's see. Confirm. Okay, got the confirmation from 1 minute below. The profile is still in the state of trend, sell trend. Now this liquidity above, this would be a riskier trade. Now we are going low, but it's just more riskier. Yeah, like I said, going with a smaller budget. And I'd attack this internal zone right here. So what I'm thinking is, what if we like spike the liquidity above to help us push lower? This that looks good. Let's see. Yeah, Gel 10. And got the sell. Okay, so that small budget would have been fine. Now I got out because I feared that we would spike in this liquidity and then my stop loss would get taken. But this was the trade ultimately. Now we got confirmation for 15 more minutes. The profile is in a state of sell trend. So it was good that we went in with half budget. We just should have left the position. It was just a matter of the liquidity. It's just a matter of becoming liquidity, I should say. Okay. So yeah, I'd say this was a sell continuation due to the profile being in a P-shape state of trend. It was in a void entry zone. Now, how much would this have been? Anyway, it would have been a win. That's all we need to concern ourselves with. Now, after the fuck, it became justified. So the new entry was right here at this internal Y. Again, like I said, after the fuck, At this point, this was the external, now this became the internal. Let's trade. See, this good buy delta here, and then this liquidity that formed. Otherwise, I'd say sell again. Would a one-to-one from there be worth it? I want to say yes as a continuation entry. Limit. See, we're still trading. We're still creating more structure. But anyway, yeah. So why did I sell? Well, this is on the 3-minute time frame. This would be the continuation. The profile is still P-shaped. So this would be the continuation entry. Or this would be the internal push, I should say, for one-to-one. And we would have got it. Or we did get it. So not necessarily a void reversal, but just a simple sell continuation. The range is becoming smaller. Now this is now a new range. I'd say a one-to-one would be good if we could get it. Okay, missed it. Actually, that would have been a great scaling opportunity, but that was the next opportunity as a continuation sell entry. Not necessarily a void profile, but we see continuation. Sell volume profile, P nodes on, sharp nodes on. This became the new range. So another one-to-one. And I want to say it would be too early for a liquidity spike. Because I know this price, if it doesn't wait for like after 10, I don't know, from what I've observed, it wouldn't occur at the beginning phases, like the first and second phase, so 8:30 to 9:30. Well, 9:30, yeah. But within this ranging, we wouldn't see no early liquidity spikes. This is something new. Sell continuations, or even perhaps buy continuations, but sell continuations. Now, I didn't view if a buy would make sense. But obviously the profile is, it's really selling off. Now we are building liquidity to the downside. We have a bit to the upside. Okay. Potentially another sell opportunity on the 3 minutes. What's the interval? Okay, now I wouldn't take this one because the zone is too large. If you want an opportunity, it would have to occur there again. The 1-minute zone within the 3-minute zone. Cherry mines, $500, Joe. So now within 1 minute, if we get the close, if we get price indicator going down for 1 more minute, right before the 10 a.m. interval, I would anticipate a sell continuation. But we'd have to close below this 1-minute zone. Looks like we're doing so. Can't be too hasty though. Okay. Looks like we're going lower. Maybe not. Actually, this would be the third opportunity it wouldn't enter. All right, I get out. This is the third sell within one range. So there's a chance for a spike in liquidity. But if it does reject, then yeah, we'll definitely sell off. Okay, yep, it is rejecting. Again, we did have that potential for the spike. The point of control just held its own. First sell opportunity, second sell opportunity, third sell opportunity. Okay, so P volume profile within a confined range. Okay, that's new. I'd say that's an opportunity. But where will we cover our ass? It's almost like a new range. Hmm. It's trying to target this 3 minute. This will be the external 3 minute. So if we look to enter the external 3 minute, let's see. Now I didn't stop to check if this area is forward. Okay, not really. Now there's liquidity below. So 400 right there. And at this point, I'd anticipate that the 10 a.m. session trends lower. Let's see. Okay, that would be a loss. Why did we lose? We're still trading within the same confined range after 3 opportunities. Okay. Now the session told me, etc., but that's a great rule, right? To be vigilant of, because you avoid becoming the liquidity, even with the opportunity of selling. Because we saw the 10 a.m. session want to trend lower, there was still liquidity on both ends. So there's still the risk now becomes higher after the second opportunity. Okay, it's now the 10:30. It's now the 10 a.m. session. We made a new low. So we're still ranging. I wouldn't anticipate a breakout support turn resistance. Let's refresh our profile. It's still in a sell trend. Okay. It's buffering out. Almost like it wants to say range. At this point we're patient. Now this zone is void. It's what I've seen. It's what I'm aware of. So I would anticipate a potential buy reversal. Okay, it's decent. At least not weak. From here to there. Let's see what the delta looks like. Okay, 2.5 delta right here. So we created low. We technically should run up into the internal of the range. Okay, 3K delta right here built up. We won't ignore this 3K delta to come to this 2. Down below is still 3K. I'd actually rather get in at the low if I were to look for an entry. Okay, bro, the point of control, we have liquidity here. Now, this external high is very weak, so I wouldn't anticipate a reversal. 3 minute structure. Bro, the point of control, there's liquidity there. Okay, I know it's obviously going to get spiked, right? But what could I do to get an entry? Buy delta is prominent. 33 delta. This doesn't look. Only an entry at this external would make sense for me. To me, at least. Buy delta is increasing. The profile is buffering out. Almost like it wants to tell me a ranging profile. So let's attack both ends. Okay, this is the entire profile. It's buffering out to say range. And then we have our profile from the recent low. which is a strong ass buy. Okay. Again, the morning session closed below. Let's see. There's potential for the 10:30 session to proceed higher or lunge. We created a low and then we respected the internal from London right here. Which I, so yeah, made low there. No low, no high. But it could go either way is what I want to see. If we do get a retracement, we want to enter here. Point of control, the delta is very great. And then it's a chance for liquidity spike right there. I'm going with a small budget. So now why I feel comfortable with this buy is because the profile is buffering out. We have liquidity on the buy side end. We made it above the point of control. We have momentum after creating this external support and then the delta to back me up. So let's see what happens. It's my take profit. So I'd actually target the external high right here. So I wouldn't look for a simple one-to-one with this trade. Let's see what happens. Okay, 17, 15. Okay, now look at this candle formation. On the 3-minute time frame, we haven't broken, but on the 1-minute time frame, we've already cleared it. But the 3-minute is the master time frame. So we basically look like we're creating an internal right here. So I'd be comfortable with another contract. And again, there's liquidity to the buy side. I take off high position right there with anticipation that we create a new high. Or at least touch the high because why? This area is weak. That's our new high, but the area is very weak. In accordance to a 1-minute time frame. So yeah, anticipation of a new high. I can use the anchored volume profile to see what my next best potential high area is. But this is a take profit one. How can we do the cover our eyes? If we truly want to go up, we shouldn't drop below the point of control. Take less of a loss if we do lose. Now I was thinking since we put in a new low, it's potential for us to put in a new high. So where would be the best area for take profit? Blockage right there. Anticipating the liquidity helps us. Yeah, I'd actually say leave it at the external. Another continuation pattern. That looks to be a scale. Is that the second candle? 21, 22 it is. That was actually a scale. There we go. Nice, 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 nice. Nice. So after I saw how that helped, I entered. At this push candle I entered, it was also the second push candle within a 3 minute cycle. Now, right here when the 21 candle closed above and it used this zone as support, that was another scale opportunity. And then immediately, my stop loss. If I can't get the break even right here, below would have been good. Now I did have the liquidity as support, so that's smooth. Okay, the buy delta has increased, broke the zone, and then we created this continuation pattern. Wouldn't be too hasty to jump. Well, okay. Wouldn't be too hasty to jump into a buy immediately though. After breaking on the 3 minute time frame, because it's a 3 minute structure, after we break, then we want to see some sign of continuation. So I guess you could say that's the patience. So here's the thing. Since we knew we were trending higher to make a new resistance, what makes sense is to anchor the volume from that low and then let it follow the price action. So that way when we see weakness, we know that then there's a potential reversal. Otherwise, continue to scale as we trend to make that new height. Now, why it wouldn't have worked before is we needed to find where we were selling within that range. So just that.